The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this very last day of the year. Gosh, it took a long time. Let me think here. It took about a year to get here. Amazing. So, that's the last trading day of the year, wrapping up, and it's fascinating. Dow's up 48 at 18,031. S&P is up 43,006. The comp index is up 25 at 4803. Gold is down 14 at 1185. We spent a little time, quite a bit of time actually last night discussing gold, dollar, etc. And hey, it was great seeing so many tigers. You know what happened? There were even people that were on their way from New Hampshire and other places to Boston, and then heard the interview that we did with Tom and I in the early afternoon, and I discussed the Boston meeting of the Boston Investors Group over at MIT. And in the darkness, they somehow found their way there. They diverted and came over. We had a huge turnout. I say we. I'm a guest, but it was a huge turnout, and I was the guest speaker. So I really enjoyed it. And so many of you are Tigers or subscribers and came up and said hi, and we discussed things afterwards, let alone during the actual event. So thank you for being there. Now, I'm going to try to go in sequence. You know, it's not always very easy for me to go in sequence. I like to free think when I'm thinking market, because it takes me to places that I need to go that I wouldn't go if I was in a very structured format. So let's go through this very step by step. Well, first of all, thank you guys for a great 3 hours before the show, and John Logan and Steve Rhodes. I want to wish you guys a real happy New Year. I want to wish Tom O'Brien, the person that's made all of this possible, just a happy New Year, and thank you for all you've done for TFNN. And of course, we've got all our shows coming out for the rest of the day. We've got Larry Pesavento, we've got Dave White is away, and I believe Daryl Martin's away, but you guys, happy New Year as well. And you've got Andy Hecht, happy New Year. And to the crew at TFNN who actually managed to put these things together and make things run. Absolutely. I mean, I just come in and I do my stuff. Background, they all working away. Alan, Steve, my engineers, just great to have you around. Just keeping me on track, keeping me on time. So with that said, I wish you all members out of the Tiger family just a wonderful 2015. Thank goodness we've had a very nice, from our opening core subscribers, we had a very nice year. 2014, we'll try to do the same coming up. I gave an outlook last night on what I'm looking at. I'll repeat it here. And it's based on the Chapman Wave methodology. And what I was saying is that, let me just go to the e-minis here, that in a sense, I was very concerned, very nervous, because it seemed to me I had a clarity, a vision of clarity that in all the time frames, I often get it in the daily or the weekly, but I don't have it in all the time frames. And that to me is a big concern, because when you think you have it, those market gods, lowercase m, trading gods, lowercase t, lowercase g, are just out there waiting to smack you on the nose, just say, oh yeah, have you not heard of hubris? Just don't be arrogant. Believe me, I'm not arrogant. This is one thing that I have respect for, and that is the stock market. It has a way of reminding you that it has no clue who you are. It has to do what it has to do. I'll outline everything. So let's go on with the story. Gold down 15 at 11,085. Silver down 54 at 15.73. You've got a high-grade copper back down at 2.82. I kept getting asked, what about copper? What about copper? And I kept thinking, should I? Shouldn't I? Should I? Shouldn't I? Shouldn't I? Nope, I decided I will not venture into that area. Not the commodities, not yet. TLT is at 125.90. It's up 22 cents. Most importantly, we spoke a lot about bonds, and I'll cover a chunk of that in a moment. We spoke about crude oil going down. There were a lot of things that we covered. So in the meantime, back at the ranch, let's get on with this. We've got patterns that we want to look at. So I'm going to show you some. Oh, and the dollar. The dollar, I decided yesterday afternoon after an extensive bit of work, well, yesterday during the day and then after the close, that the dollar, in fact, was making not D but a B. That, in fact, made that peak G because that completed the Chapman wave stalk leg formation. And it popped up in the leg, went to the neck. So there's the body, there's the neck. This, if you're looking at the charts, the daily chart, it goes to a G, makes the head, and then pulls back down very sharply and goes from 89.55, sharply for the dollar that is, down from 85.55 down to 87.63. Woohoo! A full 2 points, and then it rallies again. And I suspect this is going to match the market, that it's making a peak B today. And that's kind of coinciding with what I'm looking at in all the other areas. I wanted to show something here. I've never shown, well, I have. I showed it once, and I just don't remember if I ever showed it again. I found it just by chance because I was trying to get rid of some charts because of a couple of issues. So I found this chart right here. Now, you tell me, is that not a beautiful-looking chart? Let me see. I'm waiting for it to come up on the screen for the Tiger, for those that beautiful HD. Let me see if I've got it up there. Is it coming up? So this is, in fact, a chart of the Dow. It's not a daily. It's not a weekly. It's not a monthly chart. Huh? What could it be? It's not a quarterly. Huh? What could it be? Well, let's just do one thing really quickly. This is what I tried to demonstrate last night. I took a blank chart and I just showed how you can draw trend lines. In this particular case, I'm going to show you the trend line that, to my eye, first of all, I would have taken it from that high right there, going all the way to that high, and I would have just hit it, bing, right there. That, to me, is not the line that I would like to use. So I'm going to go, in this case, I didn't use this chart. I'm just using this chart right now. I'm not going to tell you what it is. I'm going to, first of all, outline what I want to right there. Now, I'm looking at two trend lines, three major support levels that were hit. This one here, this one here, this one here. This first one is back in October of 2011. This one here is November of 2012. And this one here is this last October, I believe. Yep, October the 15th, be the 15th. Now what I'm going to do is I'm going to draw a parallel line. I just go new parallel, and it automatically comes up. And I see where is the best fit that makes the most sense. But it's right there. It's a best fit because what it does is it goes from the starting point peak right there to about where we are. And now I'm going to tell you what I'm looking at. I'm looking at the Dow chart using a point and figure. It says 1 times 3 daily. I haven't gone through point and figure for ages. But essentially, it's using blocks, and you need 3 blocks before you can actually put in an X or a 0. So what I'm looking at here is it doesn't matter to me what it is. It's a chart, and it's notated. I finished the notation. It had been notated up to there, I think. I just finished the notation this morning. And it's a point and figure, and it says, in the point and figure, even in point and figure, you get Chapman wave Ds. In fact, my history with the point and figure, I haven't done it for ages, is that most of the time I tend to get Ds and occasional Es, very seldom Fs. I have no reason why. I just cannot explain it. But it's saying that I'm getting into, if I was to make this a red line for now, it's getting into an area of resistance, and it's only in leg C, and it should go higher. And that higher says that it should go above the 18,102 level. 18,103 was the exact high, but this says 102. I'll go with 102. And that the resistance is going to be in the monthly chart, in this long-term chart, because it's a daily long-term chart. It says daily, but actually it's based on the daily. Because it's point and figure, it's only using the daily as its factor, as its benchmark. But it's not saying on those particular days because it's based on the point and figure. So this is saying that in the area of 18,230s, and that coincides with a lot of what I'm looking at, there should be a lot of resistance. All right? So that's just one look. Now I'm going to take this away, and I'm going to go through something else. I had drawn this in for my subscribers to my opening call, and I said that we should be making a peak A. There's a little resistance there. There was a Chapman wave left side, right side price time action. It went right through it. And then there was a rising wedge formation. That said that we should have this cup formation. And the cup formation has tremendous support in the 17,900s with the 9-period exponential moving average of 17,924 right now. That's where it is, as being key support. Okay. I'd also said that I'm suspecting there's a chance that we might dip a little bit and then start an inside buy mode. And that says in the daily chart, underneath this peak A, we get another little A here, another little B, and then we break out. But that doesn't matter. What really matters is that I'm going to go to this chart right here, going to go out of the dollar, and I'm going to go straight into, because it's the last day of the year. Let me just double check here. Okay, good. Dollar IND, that's how I get the dollar chart. And what do we have? We have a resistance, a rising resistance level that says this inside track, Chapman wave inside track resistance should come in above 18,103 and in the 140 level to the 18,190 level will be a resistance. Fine. Okay, now let me give you my outlook. And my outlook says, based on the Chapman wave methodology, if I'm correct, and there isn't a smash to the downside below 17,600 to 17,500 major shorter-term support, that'll just negate everything I'm saying. At least it'll fracture the theory in time. I'm suspecting we're going to go to peak B, peak C, and peak D. The minimum that it can take, unless today we have a spectacular move that takes you over 18,104, I don't think so. That should start coming Friday. We should start some kind of an up move, or coming early next week, and that should take you to D. That's the daily. I'll be back and we'll continue this discussion, or some discussion. It is commentary on my part. I'll be right back. Now it's up 43 in Basil Chapman, Tiger Technicians Hour, December 31st, wrap up the year day.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the
programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So, let's go through this in detail. We've got the Dow, and what I've been talking about is my estimation of what's going on right now is that this is the most. I spoke about it last night. I mentioned, if some people remember, that 3 years ago I said this is the most hated bull market. 2 years ago I said when I meant this is the most hated bull market, and last night I said again. I suspect that it's just starting to change its character now, and that over the next couple of weeks we're going to have people just starting to pile in, not starting to increase their holdings in the stock market. All those people that got out in 2009, 2010, and every time I saw them, they would say, "What's with this market?" They shrugged their shoulders, and that always meant, "What's with this market?" means I'm not in it, and it keeps going up. What the heck? And these are people that have been in the market for 20 years, 30 years, sometimes even more. They got out. And I'm suspecting those people are going to get in. And the way it's going to work is that the Dow is going to, not very much higher, it's going to creep higher over the next, the Dow and the S&P. The Qs are lagging because there's some sectors that are not that strong, and I'll talk about that in a moment, but they're okay. And there's a final move in one of the sectors going on right now, and a final meaning in this particular stage. So let's go back to our story. So the Dow and the S&P climb higher. There's a trend line in the week and the daily that is rising, and that's the modest trend line that I see moving higher. And the weekly chart, the Dow could go towards the 18,250 to maybe even 18,390. I even think maybe 18,450 is possible on the upside. Not that much, not a big deal. But here's the issue. The Dow is in leg C, and it's going to make a peak C this week if it cannot break above 18,103. I think that's going to be a little hard to do, but we'll see. The S&P is in leg B, and it made a high of 2,092.70 last week. Listen to this. And this week, it's got a high of 2,093.55, less than a point higher. And that point says you've extended leg B. I'm going to base any signals I get on my S&P, not on the Dow, because I think the Dow will get to a D, but the S&P might even have to go an extra week to E. That could take us all the way through January. Modest higher highs, following the script right here with the resistance in the S&P between, I'd say, 2100, and it could be 2107. It could move higher, not a big deal, but I don't think it's a breakaway move in this one. Just steadily higher to frustrate both the bulls and the bears. Aha! Now we get to the issue. When that ends, I suspect... Now, is the NDX bearish? I question the gen. I'll get to that in a moment. I'm going to go step by step. There's the last day of the trading year, not the last day of the week, but the last day of the trading year, and we want to deal with the last day of the year. Now, here's the issue. When I get some kind of a signal in my weekly chart, sometime in late January, hey, it could even go to February, I don't know, I'm just following the waveform. 1 penny difference on a weekly basis with a new high means you can't get a peak until the following week. That's 2 weeks. If it's a Monday, you'd have to wait until the following Friday, not the Friday coming up, but the week after that, before you can actually get a confirmation that you've made a peak. You know, trading-wise, you could do 1,000 things, but the technique is very strict. Okay. Then we get a pullback. No. Then we get a really sharp decline. That's what I'm thinking. It's not the big one. It is a sharp decline, and I have a template in my mind of what it follows, not the issue. The issue is that decline has all those people that you hear on CNBC for a week now, at least, every single hour of every day, saying something about 8%. I don't know whether it's 8% up in the market, whatever the 8% is. They are all going to change their tune when this market comes smashing to the downside. When I get that sell signal. And at that point, we have to be holding real tight. Hopefully we'll time it right. I don't know if I'm going to be able to do that. That's what makes me really nervous. Having the concept and then having the patience to let things unfold without over-anticipating. Tough. All right. If that's the case, the sell-off that comes in the first quarter is going to be double-digit and scare the daylights out of many people. Even the big bulls are going to say, oh, man, this really looks ugly. Why? Because it's going to drag down the sectors that have been the absolute best. Why? Because we've rotated into another group, the cyclical sectors that are going to do best in 2015, in the first half of 2015. I'll continue the story when we get back. Very exciting. Dow's up 33, S&P's up 2.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box...
and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Of TFNN.com.
Hi, folks. We are back. We are back, and this is going to be the part that I want to allude to. The sell-off that I'm anticipating in the first quarter is merely a backdrop to a rotation, and that's going to be the deciding factor on the depth of any move down. And I don't want to, in the back of my mind, I have numbers, I have percentages, but hey, it's back of the mind, just on the back of a piece of paper. I can't give you the figures as it stands right now because I don't know where I'm getting my top, where the actual sell signal even starts. But the shorter term says, let's go through this again, the daily will make a pretty sharp pullback, but it's just within the context of the weekly chart moving higher. And that should come in, I'm just guessing, somewhere around the 10th, 11th, 12th of maybe the second-ish week of January, maybe the 3rd, I'm not sure yet, depends on how it plays out. And I don't think it's all that much higher. I think 300-400 points up, it's not a big deal, could do that. Okay. Might not even be 400 points up. I'll just deal with it as we move along. It is the sell-off that's going to be scary, and I'm thinking also time. Instead of that 1 month, October kind of smashed to the downside, and then we're up at new all-time highs, this is different. What I'm thinking of is a move that takes in the most favored sectors so that the portfolio managers really feel it. They feel like they've got a 50% decline when in fact it's going to be way, way less. Not a 50, but at least 20, 25% decline. Why? Because they've got that area like the biotechs, etc., the ones that have done absolutely spectacularly. Maybe even the healthcare area. Introducing a new thought. Now, and that is the period where gold has a pretty decent bounce. And that's in the big move down in the weekly chart says that sometime in maybe the February period, that's the first time you get a tradable rally in gold. The dollar, let me pull it up here. Yeah, the dollar, within its major context of a bull market that is sponsored by governments, not UI or Fidelity or any big institution. Governments, the biggest of all institutions, are backing the dollar. Look at that vertical move in the monthly chart. Look at this. This is a move that's gone with a peak that has lasted no more than a week or two in the weekly chart since it started. Look at this up move. Beautiful. And all I'm thinking of is that somehow you're going to have pullbacks, but you'll be going towards the upside, and then at some point there'll be a very sharp pullback in the weekly chart of the dollar that takes somewhere like 3 to 5 weeks to consolidate. That's when gold has a pretty decent move. Maybe all the commodities have a decent move. They could even start a little sooner, I'm not sure, because they don't have to overlap exactly. They can start. But gold is still in a major bear market, and that move that I see later on might come from lower down, but the fact is it's going to be a move that an up move that you can trade as a short to intermediate term 3 to 4 or 5 week rally. That's just what my thinking. This is the scenario I'm painting. Aha. And then we get the VIX index, which starts to climb into the 19s. This is later on. The first move in the daily will be that the VIX has a big pop-up, goes into the 20s, and then pulls back. The one that comes later on in the February period, if I'm correct, this is only if I'm correct, is one that says that the VIX index makes another U-shaped pattern with a nice symmetry here and starts to spiral up into the 25s or higher. And that is the sell-off that scares the data out of anyone who only just recently got into the market. And they will have every right to be scared. Why? Because they've probably gone into the best areas now, which will not be the best areas for the decline. And then we get a climactic low, and that low starts the coda to a phase that I'm only calling the coda phase. Will it last 3 months, 6 months? How high will it go? How much higher in the all-time highs will it go? Will the Dow go to the 19,500 area? I don't know any of that. All I can say is that I've got a template in the back of my mind that says rally continues. There will be some real whippy sessions going in January, but it'll be higher highs and higher lows until the weekly charts get to a peak that says there's a sell signal coming. And that sell signal is very sharp. Double digits. It lasts time and price. Instead of just the 4 weeks, it's 6 to 8 weeks or something. And then we get a summer rally. Kind of my thinking. And that rally has real velocity to it. It has, it is very, very, very sharp, very serious. And you get all the aspects that we were looking at in 2000, except for one. In that, I don't know if it's going to be the one that has, or in every gym, the TVs are tuned to CNBC or Bloomberg or something that has a ticker, or even those shows, those soppy shows in the afternoon. They have right there in the corner the ticker showing what the Dow or the S&P is doing, just like happened in 99 into 2000. Now, could this last into 2016, 2017? At this particular point, I don't know. But let me just do a couple of things here. The interesting chart. And this interesting chart is interesting for 3 reasons. One is because you just need to go above Dow 18,103.45 by 1 penny, if that's going to be the high going to Friday at 4 o'clock. But all you need to do is the December high has to be taken out by 1 penny at any point in January. It could be the 3rd or 4th trading day of January. That will extend the match between the 43-month high to low to high that was made in October of 2007 in the Dow to the low of March of 2009 to the high of May of 2011, peak D, 43 months, to the match that's going on right as we speak this moment of the high of May 2011 to the low of October 2011 to right now we're in the 43rd month. In this particular chart formation, if there's a breakout in January above 18,000, I would say 18,500. I'm not even talking about a close. It's got nothing to do with the close. It just has to break out and hit that level. It says that the match of 43 months has been pierced to the upside in almost the same. If you add it up, you're talking about 86 months. In 86 months, you can make a miss of 1 month. And it says that the validity of this particular pattern is probably suggesting that leg E right there has to remain in place. And if I was to say it's an E/A, that would imply that the rally in the Dow could go all the way into, it would take at least the whole year to get to another leg D if I recycle. Let me just make that as clear as possible. That would imply that in December of 2013, the last day of the trading day of 2 years ago, was the high bar. That 16,588 level and the 2-month pullback, and within 4 months you broke out to a new high, that started a brand new leg A, and that you could really go B, C, and D. That's the alternate count. I don't feel it's even necessary right now for me to think about E or A or anything. I don't have any signals yet in the daily or the weekly. And as soon as I get that, I can start to see and study very closely how the MACD stochastic, on-balance volume, relative strength, etc. Well, I even look at that point, I'll even be looking at volume. Look how volume's changed in the Dow in this rally. There's nothing in the monthly charts. Look at the huge volume going into the high of 2008. This is fascinating to me. And I'll talk about that as the weeks unfold, about what I'm looking at, how the relationship of the NASDAQ, which usurped, which took and sucked every single penny out of the Dow in the 2000 and top. That's why it went to a higher high. 3 months later, the Dow didn't go to the 19,000. I was 17,000, 19,000, I thought then. And now, of course, we've got it at 11, 12, 14 years later. I'm thinking that I've got to consider that real estate might be sucking the money out from those people in the middle-aged to older area who have got out the markets completely and put money for their kids or themselves in downsizing, etc., into real estate. Maybe real estate is the over-the-counter market of the 2000s. It's a complex thing. I'll talk about it. I'm going to go to our first caller, Kay Rico in Costa Rica. Kay Rico, how are you? I haven't heard from you for a long time. Hope you are well.
Hi. Well, Basil, I think we both belong to the same medical club. I had quadruple bypass heart surgery in the end of July. And I believe you had some quadruple or triple.
Exactly a year ago. I had the old quadruple, and because it was Thanksgiving, they just threw in. They gave me a gift of a heart valve replacement. So, I'm the bionic man. I wouldn't even want to mention all the other things. But you want to know something? I am proud to say that I'm playing the best tennis I've played in my life. So that's a good thing. How are you doing, Rico?
Good. It's funny you mentioned the heart valve. I originally came back from Costa Rica to have a major hernia operation, a hernia repaired because it was really bad. But doing the pre-op investigation and making sure I was safe to be on an operating table. Some something extremely went wrong with my physical, and they said, "Look, man, you got a serious heart problem." And I went right from the angiogram room to open heart surgery without skipping a beat.
You know, I have to tell you, I mentioned this last night, and I always talk about it. I believe my wife, who's a physician, and she's for decades now, she's worked in an area, the Boston City Hospital area. It's not called the Boston City Hospital anymore, but she has worked with the indigent, and she's worked a lot with very poor people, inner city people. She has a mixed patient roster, but and I look at the world as sunny, and she always looks at the glass as half full, and she comes out with these stories, and they are just terrible stories. But the reality is that this is just an incredible age to be living in. Just think about. I always think of Mozart. Whatever I do, I think poor old Mozart. Imagine. And he has to get up cold weather. He's got all these compositions to do, freezing, hasn't got enough money and all that stuff. And health care, what an age we're in. I mean, when you look at the biotech stocks, when you see what's coming online, I'm in awe of this particular area. The fact that we're going into a period of excessivity is another issue completely. But the medical capabilities today are unbelievable. I'm in awe of what's going on, and to think that I could have. I mean,
yeah, they could have saved. They saved our lives, is what they
basically saved our lives. There's just no question about it. I mean, I was playing tennis when I had this feeling that I had recognized, because I'd had a heart attack a couple of decades ago as a young person, and it was something I'd always watched. So I stopped playing. I actually didn't stop playing. I played for another game, saying, I got to check this out. This is not good. And if it feels the same way, this could be the very last game of tennis I'll ever play, or I've got to stop. So I played one game, and then I sat down. My partner said, "What on earth is going on? You never do. What's going on?" I said, "Mark, we always joke. I always say, you and I, for years and years, have played to the death. We play, you win a set, and then I win a set, then you win a set, and we play the hardest we can. Except today, we're going to make it a theoretical thing. I'm going back home, and my wife will take me right off to the hospital," and that's exactly what happened. So I was very lucky. I recognized the symptoms. So let's get on with that. Let's go. I wish you the best recovery possible, and a happy 2015, and a healthy one. Okay, Rico, let's look at your stock.
Okay, thank you. You too, by the way. Happy, healthy.
Yes.
So the stock is Detroit Edison, DTE.
Oh, I have not looked at this for absolute ages. Let me just do this real quickly. I like to do the waveform. The last is A, B. It's in C, I think. I've got to do this carefully. So it's A, B, C, D. A, B, and it's an alternate count, so that's E, B, F, C. I think it's still looking. Are you in this?
No, family members are.
Okay, so this is what I'm going to recommend. Because it's family members, number one, whatever I say, you've got to digest it, think it through, and then make your own decision. I'm only going to give you parameters, because the sector of energy, this must be electric energy. What energy is it?
Yeah, electric.
Okay, so this has been on fire. This has been really, that was a good terminology. This has been, the break's coming up. It gives me a good opportunity. I just want to give you parameters on.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back, and we're on with Keirika from Costa Rica, and we are looking at DTE, which is trading at 87.68, energy company, and made a peak E in the daily chart, making a leg. I'm calling it a leg C. There could be an alternate count. I just see no reason right now why I should even think that this is not C, because it's acting so well. The technicals are very good, and the monthly chart, I've also got an alternate count, but I see no reason in the monthly chart to make a decision on whether this is some kind of a top. That'll come from other factors. So this is what I'm going to recommend, Keirika. I would do nothing with it right now. I suspect that it's going to be in a little holding pattern just for another day or two, and then it's going to attempt one more higher high, and that should be, if it's not next week, it'll be the following week. But that is in the short to intermediate term. So far, in the longer term, I don't have any signals to say anything other than it's at 87.64. If DTE starts to, if they're in long-term positions, I just get a little concerned if it closed for more than 2 weeks under $84. And then what I would say is, you know what, maybe you can take off a little bit, but don't really change positions. But I am going to ask you, if you're able to do that, could you call me in exactly a week? Because today, Wednesday, exactly in a week's time, on Wednesday of next week, and I'll tell you why. I want to see how the candle's forming in the weekly chart. I want to see where it is after 3 days of trading next week, so that by midweek I can get a sense of whether or not it's going to try to get the new high right now, or it needs more consolidation. But I would not like, for a dividend stock, I don't want them to change positions on what I'm saying. I'm just saying that under 84, I just get a little cautious. I'd probably personally want to take something off, and I'd put that back. But of course, the capital gains and all sorts of things, it might not be worth it. You might be putting it back at the same price after it dips, and then it shows strength. So I don't want to change anything, but what I would like you to do, if you can, call me next Wednesday or maybe Thursday. Let's look at it again. Is that okay?
Very good, very good.
Thank you very much, and congratulations to the family members, because they've got a stock that has just a lovely chart pattern, and it's been a steady winner. Good. Thanks for calling, and a Happy New Year, Kairika.
You too. Thank you.
Thank you. So we had Freeman who asked me about Amazon, but then he couldn't hold. I will do it, Freeman. I'll do it. Amazon's actually looking quite good on the short term. The weekly chart is just not looking great, and the monthly chart has me really worried. I'm anticipating that Amazon at some point is going to break the uptrend line. So let me do two things. One is I think it's going to go to leg D above 314.27. My target would be, if Amazon's able to go to 318, doesn't even have to hold there. He just has to get there. Then the 200-period moving average of 321 will be in play. And my suspicion is people will be thinking that Amazon is finally starting to make a profit, and that they'll announce a profit. The chart says, hey, don't be disappointed if Amazon once again disappoints everybody. I'd be watching it, but I know that you're more a shorter-term trader or a long-term trader. In this particular case, if you are long, I would just put a trading stop. Let Amazon tell you that if it gets to 318 and then rallies to 321, you just keep raising your stop. Let it tell you. And I would not get out of it unless it closed under its 312. 308 is the 9-period moving average support. And if you're a short-term trader, I'd be careful there. If it's more intermediate term, 306 is, I'd give it to 306 as a support. Hope that helped you. So, and a Happy New Year. So just before we go to Larry, and Larry, thanks for everything you do, and Happy New Year to you and your family. Let me just do this. I had an email about the VIX. I had an email about the SMHs. I'm not going to talk about the SMHs, which is the semiconductor index. The candle that's forming at the end of the day with this doji is something I'll discuss, and I'll discuss it on Friday. In the meantime, there's a chance it could have a little bit more of a rally. I'm watching it really closely. I'm watching the IBB very closely. I'm watching a number of the things, and why the QQQ is kind of underperforming. We'll talk about that. Have a wonderful, wonderful New Year's, and I'll see everyone in 2015. Have a great rest of the day and holiday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.